Hello, everyone. Thanks for tuning in to the Stock Market Jobber site. So, anyway, I think there's a lot of interesting stuff going on tonight. So, I'm not going to entertain you with my brilliant observations about society and politics. Well, maybe I will. I kind of can't get away from that. But I'm sure you don't really want to hear about that. I'm sure you want to hear about how you can make money. Now, I think that probably the most interesting thing going on in the market now, and things change. Sometimes different things run the market. Sometimes it's like different things are in charge. Sometimes different things are in the driver's seat. Sometimes it's tech, sometimes it's commodity, sometimes it's financials, sometimes it's easy to figure out what's driving the market, and that's when you can make money. Sometimes it's difficult to figure out what's running the market, and then maybe you need to step out and kind of wait for an opportunity to present itself. But I think what's really interesting right now is what's going on in the energy sector. We could be seeing a breakout in oil. And if oil breaks out, I mean, gosh, there's going to be a lot of money to be made. And even if you're not an oil trader, if you don't trade oil futures, well, there's a lot of ways to get exposure in the equity markets. So if I'm talking about a commodity, oil or natural gas or wheat, don't let it discourage you. You can make money trading stocks in the energy sector by trading stocks. And guess what? The stock's action a lot of times is based on the price of the commodity. So if ExxonMobil, ConocoPhillips, Exxon, these huge companies have all this oil in their big storage tanks or wherever the hell they store it. Point is, that's their biggest asset. So if the price of oil goes up, the companies become more valuable and the stock prices will go up. So here's our oil sector. Well, this isn't really a sector, it's a future. But I think oil kind of has made the move here. I think oil is kind of breaking out. A lot of times in markets, and this happens in any market, whether it's stocks or cryptos or whatever, you get a level that was support, and this is like I think about 82.20. You get support turns into resistance, and how miraculously does this happen? Actually, I don't want to say miraculous. I save that for religion. How amazingly does this level that was support turn into resistance? Well, it's psychology, and if you look at these charts, you got to look at them through the prism of what does this tell us about psychology. And why would a level that was support somehow incredibly turn into resistance? We're talking about oil, everybody. We're talking about a market that's worth trillions and trillions of dollars. We're talking about a market where there's stuff going on in Alaska, there's stuff going on in Saudi Arabia, there's stuff going on here, there's stuff going on there. It's like this global thing. But yet, somehow, amazingly, the level that was support somehow became resistance. And you don't need to be a former hedge fund trader or super ninja warrior trader or whatever it is, the garbage that people are marketing now. Warrior trading. Oh, we're warriors. Oh, what were they? Were warriors when they had to pay the FTC millions of dollars for defrauding people. When I first started at Benzinga, they're like, "Oh, warrior trading is your competition." Listen, you want to learn how markets really work? Sign up for stockmarketjobber.com. There's no guarantees this or that, but we want people that want to learn. But anyway, why would a level that was support somehow incredibly turn into resistance? Well, remorseful buyers are mad at themselves when the market goes lower, and they're like, "Oh man, I made a mistake. If I can get out of this at break even, I'm going to." So you have these remorseful buyers placing sell orders at the level that was support, and if there's enough, it turns into resistance. Now, I think what's going on here is this resistance has broken. Broken is a term traders use when we say, "Oh, resistance has broken," but it's not just a term. If you're going to use these terms when you're talking to your friends or when you're online, if you're a member of the stockmarketjobber.com community, I really want you to know what these terms mean, and I don't want you to just regurgitate stuff because people that just regurgitate stuff don't really know what they're talking about. Like in the Bed Bath and Beyond thing last year, it's like, oh, gamma squeeze. Yeah. How many people did you know that talked about the gamma squeeze? If you're a Reddit trader, probably 95%. How many people actually knew what the hell a gamma squeeze actually is? 5%? I don't know. But anyway, let's just go back to here. Oil has gotten above this important level. I think it's going to stay above there. And this is, this shows us something about the psychology of the markets or the supply and demand. There were a lot of sellers that were looking to sell around 82.20, 82.50. The fact that the market is above that now tells us something. It tells us that the investors who wanted to sell at that level are out of the market. They finished their orders, maybe they canceled their orders. Regardless, when you take supply out of a market, when you take sellers out of a market, when the buyers come in, they're not going to be able to find sellers if they really want to buy. If they really want to buy, they're going to have to pay a premium, and that could force the market to go higher. Now, if I look at oil, the next important level I see is up here around 92. It's at 84.20. I think it could get to 92. I think it can kind of happen quickly. I'm not guaranteeing it. I'm not giving a trade recommendation, but this is something I think you should look at. Now, look at this. Why would support turn into resistance? Well, you got remorseful buyers placing sellers. When you rip through levels like this really quickly from the 82 level up to the 92 level, it went through the level so fast that there just wasn't a lot of time for there to be a bunch of people that bought that want to get on their way out. So when the market gets back up there and sellers and buyers come in and they're looking for sellers, it's going to be like, wow, there are no sellers around, or there are some sellers, but they're only willing to sell small sizes. So if we want to buy, we got to offer we got to bid at a premium to get the sellers off of the sidelines. So when you get to a price level where there hasn't been much trading, or where the market just ripped through it before, you tend to get big moves. I mean, you can see it right here on the chart of the oil here. I mean, come on, everybody. This is oil. This is a huge $1 trillion market. Fast move up, fast move down, fast move up, fast move down, fast move down, fast move up. Why do we make these fast moves? Well, like I just said, one of the reasons why we get support is because we have remorseful sellers trying to buy their shares back. When you rip through levels really fast like this, there's just not a lot of time for people that are sellers to sell. So you don't have that much vested interest. When you rip lower like this, it's the reverse. Why does resistance form? Because you have remorseful buyers trying to get out at break even. Okay. Support becomes resistance. You can see on this chart, support becomes resistance. This is because of buyer's remorse. There are people who bought here, who regret doing so. They want to get out at break even. When the contracts get back to their price, they sell. If you have enough of these remorseful buyers placing sell orders, what was support can turn into resistance. So if you're ripping higher and you come back lower, it's because there's not a lot of remorseful sellers placing buy orders. If you rip lower and you rip higher, it's because there's not a lot of remorseful. Did I just say that wrong? If you rip higher, you don't have a lot of remorseful sellers placing buy orders that would create support. If you rip lower, you don't have a lot of buyers who bought and are trying to get out at break even. So one of the reasons why we have resistance is because we have remorseful buyers placing sellers. One of the reasons why we have support is because we have remorseful sellers placing buy orders. When you rip through these levels really fast, there's just not a lot of time for that vested interest to form. Okay, enough of the oil chart. Let's talk about how we can make money off of this. Well, there's a lot of ways, actually. I'm going to bring up the energy ETF, which tracks the energy sector. And look at this. It looks like this is breaking out. So you could trade this right here. I'm not saying this is a recommendation, because I don't want to do that, because I don't like to give recommendations. I like people to figure stuff out on their own. But energy sector stocks, oil sector stocks are moving higher. Here's the ETF. We could look at ExxonMobil. We talked about Phillips 66 the other day as a potential trade. ExxonMobil looks like it's about to move up. Look at this. Higher, gap, lower. Move higher, rip through those levels lower. Why do we have support sometimes? Because you have remorseful buyers. Sorry, oh man, I'm getting everything confused. We have remorseful sellers trying to place buy orders. And because we rip through these levels, well, you don't have a lot of sellers trying to buy their shares back. So we could be going into a space here where there's not a lot of selling or supply, and we could make a decent move higher. ExxonMobil could be a way to play this. If oil goes higher and you're not an oil trader, you can get exposure right here at ExxonMobil. All right, everybody, I think I'm going to get going. My wife is yelling at me. She's like, it's time for dinner, blah, blah, blah. I'm sure if you're married, you understand what I'm saying. But anyway, everybody, please check back tomorrow, and I will see you then. Thank you. All right, whatever. She stopped yelling. And I just want to teach my students. Okay, let's look at natural gas, because there's another way to play the energy move higher. Natural gas was in this range for a while. Now it looks like it's kind of breaking out. So oil is going higher, natural gas is going higher. If you're like, gee, Mark, I don't trade oil. I mean, I don't trade natural gas. What can I do? Well, there's an ETF that tracks natural gas. The symbol is UNG. So one of the great things about the ETFs these days is you can basically get exposure to anything. And that's one of the things I talk about on our site here. I don't give perfect recommendations. I don't admit I do. Anyone who brags like, oh, I was up 170% last year, or I'm a perfect trader, or this or that, you know what? Just ignore them, because in the real world of trading, the best traders in the world make mistakes. If people market themselves as always like, oh, I'm so great, I got this performance, I got that performance, just forget it. The best traders are going to teach you, and I'm talking to you, how to trade with what is your personality. If you take a karate class, you're not hiring the sensei to teach you how to kick people's asses. You're hiring the sensei to teach you you can kick people's asses if something goes wrong. You don't hire a sensei like, oh, go kick that guy's ass. I mean, maybe some crooked sensei like in Cobra Khan and, the Karate Kid does, but a real karate teacher is not going to say, oh, I'm going to go kick that guy's ass for you. A real karate teacher is going to teach you what is your skill set. What do you do best? If you want to kick some guy's ass after they attack you, do you do roundhouse kicks? Do you use spinning back kicks? Do you use your fist? They're going to teach you how to have a fighting style that matches your personality. And as stock market jobber, that's what I ideally want to teach. The old expression, teach a person a fish, or give a person a fish, you feed him for a day. Teach a person I can't even speak. Teach a person to fish, and you feed them for their life. So anyway, everybody, that's it. I got to go upstairs. Time for dinner, I guess. I will see you tomorrow morning. And thank you so much for tuning in.